Wednesday, April 6, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the dollar index, gold and silver. There are many people out there who focus a lot on the dollar index, and they seem to think that the dollar is very strong. Well, it might be so versus what the dollar index represents. So that's why we're going to go through the origin of the dollar index. As the Austrian School of Economics always does, we will do a regression theory analysis, which means look back at how something started to understand what that something is. And in this case, it will be the dollar index. Before we do that, we'll quickly look at some significant news, in my opinion, that came out yesterday as it pertains to inflation. And it came out of the Central Bankers Bank, the Bank for International Settlements in Basel, Switzerland. And this is the story here. It came out on Reuters. World may be on cusp of new inflationary era, BIS Central Bank Group says. So there you have Agustin Carstens. He's the general manager of the BIS. And we'll go through this article quite quickly here. It says, the world is facing a new era of higher inflation and interest rates as deteriorating ties between the West, Russia, and China, and COVID after effects drive globalization into reverse. The head of the Bank for International Settlements has warned. Soaring global energy and food prices mean almost 60% of developed economies now have year-on-year inflation above 5%. The largest share since the late 1980s, while it is over 7% in more than half of the developing world. I'm not going to go through the whole article because we want to go to the dollar index, but the most important statement that Mr. Carsten made yesterday, I think he was speaking at a conference somewhere, and I quote him, "Most likely this will require," and that's the inflationary pressures, right? Real interest rates to rise above neutral levels for a time in order to moderate demand, Carstens said, acknowledging that it could make them unpopular. So let's go through that that comment or that he made. This will require real interest rates to rise above neutral levels. I would have expected him to say that this will require interest rates, real interest rates, to go above the rate of inflation, i.e. 7% or 8%. But notice how he talks about neutral levels for interest rates, which is really, in my opinion, rubbish, really. It's the interest rates that these Keynesian central bankers think the economy is neither too hot or not too cold. They don't look at interest rates as a mechanism to protect capital versus inflation. So yeah, I'm not too sure what he means by that. So I think the neutral rate in the US, for example, or in Europe is somewhere between 2.5% and 3%. So is he telling the world that he only sees interest rates going up to those levels and that should do it? So what I'm trying to say here, yes, his warning about inflation, but first, they're behind the curve because they're the ones who create the inflation, the central banks. And what's happening now is that the world is waking up to the fact that there has been massive inflation and they don't want the currencies anymore. especially the dollar and all the other ones in the dollar index, of course. And number two, I think it's wishful thinking that they can control prices or inflation with an increase in rates up to just like 2.5% or 3%. It's not going to be enough. Anyway, let's go back to the dollar index, gold and silver. Why gold and silver? Well, because we're going to do something at the end to compare the dollar index, gold and silver. As I said, we need to go to the beginning of something to understand that something. That's the regression theory analysis that the Austrian School of Economics focuses on for its analysis. So the dollar index, also known as USDX, DXY, or DX, or even Dixie, is an index of the value of the United States dollar relative to a basket of foreign currencies, often referred to as a basket of U.S. trade partners' currencies. The index goes up when the U.S. dollar gains strength when compared to other currencies. So this is the index here. It is a weighted geometric mean of the dollar's value relative to following select currencies. So euro 57.6%, Japanese yen 13.6%, pound sterling 11.9%, Canadian dollar 9.1%, Swedish krona 4.2%, Swiss franc 3.6%. Notice that there's none of the BRIC nations' currencies in there, like the ruble, the Chinese yuan, the Brazilian real, the Indian rupee, nor the South African rand, or any other major emerging market countries. So to the history, this is where we want to look at in particular. USDX started in March 1973, soon after the dismantling of the Bretton Woods system. Yeah, and it's interesting because we spoke about the Bretton Woods system last week, I think, a few videos ago. Yes, and we noted that Nixon closed the gold window on August 15th, 1971, but that there was an agreement between these major nations that are part of the dollar index. And for the euro, you have to go back and look at the French franc, the Deutschmark, the Italian lira, and other currencies like that. The euro is just like an amalgamation of those old currencies. And we noted that the Smithsonian Agreement was signed in December of 1971. And what was that all about? Well, during the Bretton Woods regime, every currency was fixed to the dollar. So there was no fluctuation in foreign exchange. And that, in my opinion, is right, because currencies are a measure of value. And to have currencies fluctuate every second doesn't make sense. I've said many times before, it's like having a measure of length, weight, or whatever fluctuate every second. Can you imagine the yard changing every second, or even the length of the minute or the hour changing? The world will be well, it would be chaos, and that's why we have chaos in the financial system. But let's continue. So, yeah, the Smithsonian Agreement, as Nixon took gold off the system, because the US dollar was fixed to gold, the other currencies are fixed to the dollar. So indirectly, every fiat currency, or every currency, they weren't fiat up until August 15th, they were fixed to gold. But when Nixon took the dollar off gold, it meant that all these countries could cheat. They could just borrow and issue their own currency as they wished. They could inflate. There was no gold anchor. And the Smithsonian was a desperate attempt to keep this fixed fixed exchange regime. And by 1973, when the dollar index was created in March, that system unraveled. So they had to find a way to measure these floating, crappy, I owe you nothing fiat currencies. And that's what the dollar index was all about. And it started trading at 100 in March 1973. They have here calculated the dollar index back to 1967. And why is that? Well, because you could do it if you just go back and measure the currencies against the dollar before it started. So what we're going to look at now is a long-term chart of the dollar index. And as I said, it started in 1973 at 100, but you can measure it back to the late 60s. So what I've done here, and I've done this several times before over the years, is look at the cycles of the dollar index. So we're going to start with a top that there was in the dollar index in September of 1969. And the important part here of this analysis is not the price, but more the length of the cycles. And I'll explain why later on. So from September 1969, the dollar index was on a downward cycle, and it bottomed in October of 1978. And I've counted the months, the amount of months for that cycle. It was 109 months. And then from October 1978, the dollar index was on an upward cycle, and it topped in February of 1985, and this was around the time of the Plaza Accord, when the dollar was really strong, and it was almost at 165, and that cycle took 75 months. And then from 1985, we went on another downward cycle for the dollar index from, of course, February 1985 to a low in September 1992. And that took 91 months. And then from September 92, we went on another upward cycle to July 2001. And that took 106 months. And the dollar index topped just above 120, so a lower high compared to 1985. And then from July 2001, the dollar index went on a downward cycle, and it bottomed in March of 2008. And I remember March 2008 really well. That was the month that Bear Stearns would have collapsed if it wasn't for JP Morgan with the New York Fed taking over it. And on that same day, gold topped at an all-time high, just above 1,030. So that was March 2008. And the dollar index bottomed at an all-time low of 70.69. Well, that took 80 months. And then from 2008, March 2008, the dollar index went on another upward cycle. And it topped, in my opinion, because some people still think the dollar index is going to go above this level of January 2017. It topped at 103.84 or thereabouts. That was in January 2017, and that cycle was 106 months, which is the ties for second as the longest cycle. You had 109 months from 69 to 78, and you had 106 months from 92 to 2001, and that's why I think that was the top unless the cycles change, and I could be wrong about this, but I think it's a pretty reliable cycle going back over 50 years. And that's why I've picked 2017, January 2017, as the top, the recent top. And that's why I think we are on a downward cycle right now. And if you add up all the length of the cycles and you divide them by 6 cycles, you get 94.5 months. And of course, it could be more, it could be a little less, but I've taken the average to make it easier. And that corresponds to a bottom for the dollar index around mid-December 2024. So that's where that line goes there. I don't know where the price is going to be. I have a feeling it's going to be a new low. So it's going to be below that 2008 low, just above 70. It could be 65, it could be 60, who knows? It could be 67. So the other thing I wanted to point out, if you look at March 73, the dollar index started at 100. So where are we now? Well, according to bar chart, and you can look this up on barchart.com and look at the charts. We are at 99.66, so the dollar index has gone really nowhere since its creation. Yes, it's moved up and down around that 100 level, but right now, let's see how many years, 49 years, we're still around 100. And that's where gold and silver comes into the analysis, because many people still think being long the dollar index is a good hedge against inflation, that it's a good place to be, that the dollar is king. But I've looked up some data from the LBMA, and at the end of March 1973, the spot price of gold was fixed by on the LBMA at $90. And right now we're just above 1900. So would you rather have bought gold in 1973 at 90, or would you rather have bought the dollar index at 100? And I've done the same thing for silver. End of March 1973, silver was fixed at $2.197 or $2.20 basically. And despite the frustration we've had in the silver market in the last 10 years or so, yes, we're more than 10 times higher than silver was in March of 1973. Dollar index is unchanged. So that's what I mean when I say that the dollar index is really, yes, it's just a measure of IOU nothings against each other. They're not a good measure of value, of real value. You need to look at gold and silver. So I hope that's clear. And let's look at the markets now then. I'm a little later today. It's 9 a.m. London time. So we've got spot gold at 1922.30. It's down just over $1. The high has been 1927 and the low 1915. Spot silver is down 5 cents, 24.27. High's been 42 and the low 24.19. The Dow future is down 1/3% or 130 points. The NASDAQ 100 future is down 2/3% or 100 points. And the S&P 500 is down 0.4 or 19 points. The FTSE is down 12 points at 75.81. And the Euro Stoxx 50 is down 44, just over 1% at 38.69. So let's go look at those fiat currencies now. Sterling is down 0.1 at 130.62 versus the dollar. The euro is down 0.1% at 108.89. The dollar is up 0.25% versus the yen, 123.88. Looks like the dollar is starting to pick up again versus the yen. Key level there is 125. The dollar is down 0.1% versus the Chinese yuan at 636.93. And the dollar is up 0.5% actually versus the Swiss franc at 93.40. Aussie dollar is unchanged, 75.77. The dollar is up 0.1% versus the Canadian dollar, 125.04. And the Kiwi dollar is up 0.1% at 69.53. Just wanted to check where the ruble is before we look at the commodities. Quickly check the ruble. There's been a floor for the dollar around the 80 level in the ruble. That seems to be very good support. Right now, the ruble is around, well, the bid is 83.50, the offer 84.20. The low has been 80 actually. So again, that 80 level is key support for the dollar. To the general commodities, WTI crude is up 1% at 102.20. Brent crude is up 1% as well, 107.40. High-grade copper is down 0.2% at 476.50. And US nat gas is relatively strong. We've broken back above 6. It's up over 1% at 611.50. And last but not least, we're going to look at US Treasuries or the bond market. I saw yesterday that US 30-year mortgage rate or yield is going up above 5% for the first time since 2011. So whenever you see Treasury yields go up, it's going to affect all other markets, including mortgage-backed securities and mortgage yields. So yesterday we had a Fed official, a Fed vice chairwoman talk, and she was supposedly, well, she was hawkish. She said they're going to accelerate the unwinding of the balance sheet, and yields went up quite significantly, and they're continuing to go up this morning. So right now, the 10-year yield is, I think, right near the highs of the year. It's up 6 basis points at 262. The 2-year is up 6.5 at 257. So actually the curve has disinverted for now, the 2s, 10s. But I noticed as well the 3 and the 5 and the 7 years, they're going up a lot, those yields. They're like at 276, way above the 10-year yield. So that's going to be very interesting to see what happens to this house of cards if the Fed really is serious about tightening everything. I mean, I can't see the system surviving if they do. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.